Your oil gains just got wiped as Brent slips below $93. The Fed hasn't even spoken yet, and Washington is about to unveil its toughest sanctions on Tehran. Monday, August 24, 2026. Today's agenda: the toughest sanctions ever land at 2 Eastern. Asia opened soft and futures followed. Biggest listing of the year is about to file. 2 Eastern today, then Wednesday, then Friday. Now the other half of the story. Crude is lower this morning, hours before Washington unveils what it calls the toughest sanctions in history. Brent fell about 1.3% on Monday to roughly $93, with West Texas under $86. Treasury Secretary Scott Bessent holds a news conference at 2 Eastern to lay out the package. He has promised measures aimed at the banks and shippers that keep Tehran trading, because the target is the plumbing rather than Tehran itself. So, why is oil selling the news before the news? Traders are banking a good run, because both benchmarks rose more than 5% over the past week. Bessent has said maximum pressure likely means no immediate return to large-scale combat. That reads as a substitute for bombing rather than an addition, which is why the war premium is leaking. Here is the part that should matter to you. Sanctions on third countries are an inflation input, because a tanker that must reroute or relabel costs more to hire. That cost reaches your fuel bill, and the inflation number the Fed reads on Wednesday. Now, the counterweight. Morgan Stanley says supply is genuinely raising interest rates, which means the sell-off is positioning rather than a fundamental call. Nothing is confirmed until the podium, so treat every figure in circulation as a plan. Watch for one thing at 2 Eastern, whether the list names Chinese buyers. If that happens, expect the risk premium straight back. There's a second piece to this. The MSCI Asia Pacific gauge slipped 0.2% on Monday. Korea's Kospi dropped 1.4% on Monday. Samsung fell more than 6% on Monday, after promising to return as much as $80 billion. Friday still sets the board. The S&P 500 closed at 7,674 on Friday, the Dow at 53,277, and the Nasdaq at 26,180. But it lost 1.4% over the past week, which means Friday only softened the damage. The Nasdaq lost about 2% over the past week, and the largest technology names fell as a group. Bonds are the reason again. 10-year yield sat near 4.7% on Friday, and the 30-year near 5.25%. The 2-year jumped 5 basis points on Friday to 4.24%, and that end tracks policy directly. The dollar ended Friday just under 99, and the risk is that softness keeps importing inflation. Gold held above $4,600, and Bitcoin sat near $77,000 into the American Open. Read the board as one sentence, because growth is fine and financing is not. Watch for the 2-year, since a climbing short end moves your savings rate before your mortgage. Finally, let's talk about the Federal Reserve and Nvidia. The biggest deal of this week is not an earnings report. Anthropic is preparing to file its listing prospectus publicly as soon as the end of this month. Bloomberg reports the company expects to match or beat SpaceX, which raised close to $86 billion in June. That would make this the biggest year on record for American listings. New issues have already raised about $161 billion this year, against a record of $195 billion in 2021. The reason this belongs in your bond brief is simple. Each of these mega listings sells long-dated growth into the highest long yields in 2 decades. SpaceX already trades near its offer price because new supply met a discount rate that keeps rising. Reported figures put the last full-year net loss near $42 billion against quarterly revenue above $11 billion, so it is priced on the outlook. Then Wednesday night brings the other half. 40 analysts put Nvidia quarterly revenue at close to $92 billion, against the company-owned guide of $91 billion. The gap is less than a point, which means the street has stopped trying to outguess management. So the surprise that moves your index fund has to come from the October quarter outlook. Watch for that guide because semiconductors already fell more than 4% over the past week. If it lands in line, expect the peak argument to get a lot louder. The rate market repriced hard over the past week. Odds of a hike at the September meeting now sit above 4 in 10, from about a third a week earlier. Odds of at least one hike before the year ends are close to 3 in 4. That moved because the data got hot, not because anyone at the Fed guided it. Friday's flash composite output index came in at 56, the strongest since April 2022. Services led at 56.8, and expect that strength to keep the short end bid. This is a committee with a hiking bias, and Kevin Warsh has cut forward company outlook to almost nothing. 3 regional presidents already dissented for a hike in July, which means the split is on the record. Expect Friday's keynote to be read for its reaction function rather than a signal, because this chair does not pre-commit. Finally, let's turn to 2 Eastern today, then Wednesday, then Friday. 3 distinct moments define this volatile week. It starts today at 2 o'clock a.m. Eastern, where Besant unveils sanctions targeting specific Chinese refiners. Identifying these named entities transforms abstract headlines into immediate supply chain disruptions that ripple through global energy logistics. Wednesday morning delivers critical economic data, including the July core inflation gauge and second quarter output figures, alongside durable goods reports, all arriving at 8:30 a.m. Eastern before Nvidia's after-hours earnings report later that evening. Friday features Kevin Warsh delivering his inaugural Jackson Hole keynote nearly 3 weeks prior to the pivotal September rate decision. With Nvidia results and Warsh's address separated by only 36 hours, market participants must navigate concentrated risk accumulation toward week's end rather than spreading it evenly. My projection holds Brent crude above $90 per barrel, because these measures likely halt escalation fears without introducing new supply shocks. But wait, what happens if a seized tanker or sanctions against a major Chinese bank occur? That would instantly invalidate this thesis within 60 minutes. Investors should closely monitor the 2-year Treasury yield alongside oil prices, as your fuel costs, personal savings rates, and broad index fund price levels all react simultaneously to these synchronized events. This scenario mirrors 2014, when targeted refinery restrictions caused sharper price spikes than volume-based embargoes did initially. You must understand this mechanism, because second-order effects like inventory drawdowns will amplify volatility once the initial shock passes. Traders are forced into portfolio adjustments before Friday's close. Oil dipped below $93 today as traders priced in economic pressures from sanctions rather than direct war costs. The S&P 500 closed Friday at 7,674, yet the index lost 1.5% over the past week, while bonds pulled capital out of stocks and technology names faced rising borrowing expenses.